Hello, everyone, and welcome in to CrushTheStreet.com. I got a very special three-way call here. First person on the line is Keith Neumeyer, resource legend, CEO of First Majestic Silver and chairman of First Mining Gold, and also Bill Murphy of GATA, and he also runs the La Metropole Cafe. And we know that precious metals have been heavily manipulated by banks, central banks. Bill Murphy has spent much of his time in his career exposing the corruption in the space. And Keith Neumeyer has actually had experience heading up resource companies in this manipulated environment. So we're gonna talk about this today and really what we expect to happen in the precious metals market as this starts to come undone here. So I'd like to say hello individually here. Hello, Keith. Thanks for coming on the show.
Yeah, good, Ken. It's good seeing you again.
You too, sir. And Bill, thanks for coming on the show today.
Well, it's a real treat to be on with Keith because he's one of my favorite people in the industry and he's one of a kind.
Absolutely.
Well, thanks,
Well, two rock stars on the line here. Keith, let's start with you. And I'd like to talk to you about the general markets and then get it as it pertains to precious metals. The Dow Jones had an interesting 500-point down day this week. You know, everyone's worried about peak earnings fears, and it really would seem like we hit a small rock in the road that sent the proverbial boy flying off the handlebars. And I'd like to get your thoughts on the current markets as they are. Do they seem inflated to you at the moment?
Well, of course they are inflated, but these types of environments can last for many years, as we're seeing. This is not unlike the period from 1998 to 2000, where we saw even a simple business plan that had the .com after its name could go and raise tens of millions of dollars, and and their stock would explode. And many of those companies today are all bankrupt, and there's a handful of them, of course, that exist today. But most of them are gone into Never Never Land, and of course we went into a correction in 2002, which was the birth of the resource bull market, which went from 2002 to 2012. I do think that we need to see a similar type of occurrence, because this industry, or this marketplace, the stock market, and specifically meaning the mining shares, it's difficult for them to perform in an environment like today, where all the money is so much concentrated in the U.S. marketplace. And until that changes, we're seeing a lot of sideways action in the mining space, and it's just something I'm very used to. I've seen it many, many times, but fortunately, the miners have had, this is a 5-year bear market, and the miners are pretty smart. They're run by pretty good people, and for the most part, and they know how to move, and when necessary, and change their cost structures when necessary. And despite the low metal prices, which is frustrating for all of us, we're making money.
Well, yes, congratulations on that. Bill, I'd like to ask you kind of the same question here, but also the 10-year bond hit 3%, which was a major milestone. Mainstream is saying it's because of strong fundamentals, but we're at debt levels now that we've never seen before. So 3% in 2018 isn't apples to apples to what we've had when we had 3% in 2013 or 2014. So what are some of your thoughts on this, and as it pertains to the current environment?
Well, you say 3% historically, is no big deal, and everybody's been spoiled in terms of the financial sector, in terms of these low rates, and it's such an irony that gold and silver would get absolutely destroyed when rates went down to zero and sub-zero. So we're just going into a different environment. They're having some trouble keeping 3% treasury yields above that level right now, and we'll have to see how it plays out. But we're due, as Keith's talking about, we've had these trends for a long time now in terms of a lifetime, a half a decade and more, and we're due for some significant changes. And I'm hoping that this lack of interest in the mining shares, and with the public having made so much money over those 5 years in things like the Dow and financial market sector, and lately in the cryptocurrencies, the Bitcoins, they're just yawning right now at our sector because of, my subject, what I get into, the gold cartel and what they've done to the gold and silver prices. And now they have them in total lockdown. And we touched on that a bit earlier. We maybe can get into it, but I think that's going to change in spectacular fashion. But in the meantime, it's very difficult for investors to deal with, and very tough for the shares to draw much attention.
Yes. Keith, you made some news a couple years ago with an open letter to the CFTC blasting them on silver manipulation. And I'd like to ask you just in general, how has precious metals manipulation impacted your businesses in the resource sector?
Well, I can tell you as a CEO of the second largest silver producer in Mexico that it's very, very tough. We had a pretty interesting environment, going up to 2011 when silver hit $50, and then most of 2012 silver stayed in the $40 range, and then in 2013 silver spent most of its time in the $30 range, and we're making good money. Our costs obviously were a lot higher then than they are today. But the margins were good, and everyone had a smile on their face, and we're building the business and producing more ounces and doing what we're supposed to do. But then all of a sudden, in June of 2014, silver breaks below $20, and it actually hit $16 that month, which was just devastating for us and devastating for the entire sector. Because we're spending money and we're budgeting. I forget exactly what our budget price was in 2014. I'd have to look, but I would bet you it was probably $25 an ounce. If you expect $25 an ounce for your silver, and all of a sudden it's 16, what does that mean you have to do? You have to start laying off people. You have to stop exploration. You have to stop development. You have to stop building the business, and then start looking for ways to stay alive, because it's really stay alive mode at that time, because you're actually producing ounces at a loss, and there's only so long you can do that before you bankrupt. So we had actually 5,500 employees back in early 2012, and we got all the way down to 3,800 employees at our low a year ago. So, that's a lot of people that lost their jobs, and that affects these communities in a very serious way. It affects our social license because the workers don't really understand the public markets. So it just makes everything really, really tough. And when as a miner, if you're told, or we're told, okay, you're going to get $20 an ounce for your silver every day for the next 5 years, I could build a pretty interesting business around that. But if I budget at 20 and all of a sudden we're at 15, it's, how do you build a business that way? Right? It just makes it really tough.
Yeah, no, and that's some interesting points there. And I think a lot of people don't think about that when they think of, JP Morgan manipulating the price of silver. And so I'd like to ask you, Bill, Keith seemed to touch on it, but is there a morality issue with precious metals manipulation, the people behind the manipulation of precious metals? And I'd like to just kind of get your thoughts on that.
Well, simplistically put, Paul Volcker, former Fed chairman, said it a long time ago. Gold going up is bad, gold going down is good. And it's all about, if you think about it, if gold were to go up $100 tomorrow, what would be the headlines all around the world? What is wrong? And it's a negative for the rich and powerful, for the bankers, for the people in power. So it's in their interest to keep everything as copacetic as possible and keep the gold and silver prices low. And they've just gone, almost berserk of late to keep the precious metals prices down where they were. And people say, well, the average person, doesn't care. I mean, they want the Dow to be up and they want things to be good, and I understand that. But if you're making what's really going on behind the scenes dysfunctional and disguising what's really going on, and perhaps the gold going up would help, would enhance interest rates going up and be a negative for a period of time. And silver is related to gold in that regard, so it's their kryptonite. And if it creates a false sensation and then the markets blow up and say the Dow collapses and then everybody wants, and it comes down to nowhere, how could this have happened, they'll be saying. And people can be wiped out because they don't see something coming, because the natural barometer or thermometer of U.S. financial market health has been made dysfunctional. So yeah, no one will care about it at all. And then all of a sudden, if there's a market collapse because things weren't, seen or they've been disguised, everybody will want answers. And it'll be like the other scandals that everyone's aware of, like an Enron or Bernie Madoff, or even when it comes to the women's issues. And just look what happened to Bill Cosby, and that kind of stuff was going on for years, and now it's a horrendous scandal. It's been there all the time. So it is a big morality issue down the road, and nobody will care now, but they will when all heck breaks loose. Right.
Yeah, Bill, we'll start off with you on this. You mentioned when we were in the pre-interview here that you don't really see a bull market in a traditional sense. I think you said in silver, you see it as more of just a revaluation. It's not going to necessarily trade higher, but just kind of explode higher. So I'd like to get your thoughts on that and then bounce that over to Keith as well.
Well, Keith's the man on this subject, so I should be deferring to him right away. But my simple opinion is that this market is not functional. They've taken it down to playing tennis lob ball at 1650 back and forth. I think I've seen it do it like 150 times of late. It can run up to 1723, go right back down. The open interest can go up. Normally it would drop when the price goes down, as Keith was talking about. Instead, it goes up to an all-time high, 243,000 contracts. Now it's just fallen 55,000 contracts, and the price has only changed 2 cents. And I think the J.P. Morgan crowd has made it dysfunctional for the time being and made life miserable for people like myself and people who have followed me and thinking silver is going to go way up there. And so I think what's going to happen, it's just my opinion, we won't have bull markets like we've had in the past. It's going to be a nightmare, and then all of a sudden the silver market's going to blow up, and when it takes out 21, it's going to head towards 50 and then go to $100 faster than anybody can imagine, because there'll be a panic to get physical supply. And it's just an opinion, but it's Newton's law, which is going to kick in. This horrible reaction that's been enforced will be an equal and opposite one on the upside, and it won't be a moves like we've seen in the past. It'll be a Bitcoin sort of event, and all of a sudden people will be talking about $100 silver and prices higher than that I think Keith is looking for.
Keith, so you're closest to the spigot when it comes to the production of silver specifically. And so, what are your thoughts in the supply side when it comes to silver, and just what you expect to happen as prices go up, especially after we heard Bill here?
Well, I was in New York a couple of weeks ago when at the Silver Summit breakfast, where they released the 2017 silver report. It's an annual report that comes out each year about supply and demand fundamentals of the metal. And we've now seen 2 consecutive years of silver production dropping on a global scale. The uses of the metal are climbing. The deficit is still there, and there's been this continuous deficit in the silver space that have shown up for year after year after year. And it's I get asked the question constantly, well, if there's this deficit that is continually there and above ground supplies are dropping, why is the price not going up? It is a bit of a confusing situation. It's a very unique market, and it's in the best interest of these banks to keep this trading range where it is, and until it just becomes too expensive to do it any longer. And I think we're going to see that. If you're Sony or Tesla or Apple or Samsung, or solar panel manufacturer who are huge consumers of silver, and you phone up J.P. Morgan or HSBC and say, look, I want my 50 million ounces of silver delivered to these ABC port around the world over the next 12 months, and the bank says, okay, no problem, here's your price, here's your 50 million ounces at $17. The buyer's happy because now they know what their cost is, and they could find, they could estimate their whatever they're doing to build whatever they're building, and the bank is now all of a sudden short, and it's in their best interest to keep the market within a reasonable range in order for that short position not to cost them too much. And we saw that, if we go back to 2011, that whole run from $40 to $50 was short covering. And it was the banks, in a lot of pain, having to cover their short position. And then obviously things corrected very quickly. But I think we're going to see a supply disruption situation. We're only mining 9 to 1 worldwide. For every 1 ounce of gold, we're mining only 9 ounces of silver, and we're trading at something like 82 to 1 or 80 to 1. And how does a ratio like that last? And in a deficit market last? We're going to have a situation where one of these big consumers will just simply not be able to produce their product because they're going to run out of metal. And, I was down at the BMO conference just in February, and the talk of the conference was battery metals and electric, all these new age energy metals, nickel, copper, zinc, and so on, cobalt. Yet, none of these metals would actually work without silver. Because what is an electric vehicle? It's a computer sitting on a stack of batteries. And that computer uses 3 times more silver than a normal fuel combustion car. And the Saudis just announced a huge solar farm a couple of weeks ago, and we did the calculation, and we figured they need 600 million ounces of silver over the next 10 years to build this solar farm. Wow. Well, where are they going to get that silver from?
Wow. Keith, so switching over to gold a little bit here, gold's got a $8 trillion market cap roughly. Bitcoin is something everyone has gotten used to looking at the market cap. $100 billion market cap for Bitcoin, 200 billion, 300 billion as it was moving. What is gold's true fair market cap? What would you say it should be? Is it 20 trillion? Is it 50 trillion? Is there any sort of estimation, in your opinion, that gold should be at to represent its true form as money?
Well, I own gold because it's the granddaddy of currencies. I don't own gold for political risk. I actually don't like seeing gold move around due to political risk, and I wouldn't recommend people buy gold for political risk. I think gold is a hedge against other currencies, and it's been the best performing asset, decade after decade, and I think will continue to be, despite the fact we're frustrated with this, trading range it's in. It still has performed relatively well. It is up 30% over a space of a year, and that's nothing to scoff at, despite the fact I think it should be, much, much higher. I'm really of Jim Rickards' kind of opinion on this. I think with the amount of debt, the amount of currency that's been created, fiat currency being created globally, if you're to do the calculation, he's done it apparently, and he says that we need $10,000 gold, to reset the world financial system. I think we're going to go into a major financial crisis that's going to make 2008, 2009 look small, and I think that's going to force the governments to reset the system in some way. I don't have a crystal ball. I don't exactly know how it's all going to work or when it's going to work, but I think gold has to be priced at a much, much higher level in order to get these governments off the hook, and I think that's why the governments and the central banks have been buying so much gold lately.
Bill, many people have been calling gold irrelevant, especially in this world of Bitcoin. With Bitcoin emerging, this alternative vehicle, this 21st century vehicle of wealth storage. A lot of people are calling gold irrelevant going forward here. And one of the things that we discussed in the pre-interview was at $1,300 gold and gold doing what it's doing, it's essentially been irrelevant to a certain degree here. But what are your thoughts in terms of gold being relevant going forward and retaining its thousands of years long history of storing wealth?
I think Keith said it very well, of course, and that what's coming. What the gold cartel, as I call it, the bullion banks, U.S. government, the BIS, and so on. That's exactly how they want gold to look and trade and come across to the investing world, say in the United States, as irrelevant. And it's been made very tough the past years because of what stock markets have done, real estate, art, the cryptocurrencies. And then we go back over where we've come from and what's happened, since 2011. So it's made people think like that. But, things work in cycles, and that's going to change. And, everybody has a different opinion of what the price might be or this or that. As I said, I think silver is going to go way past 100 once it finally breaks out. And we had a conference in Dawson City up north in 2005, and we had some well-known Russian there and so on. It was my opinion at the time that it would take $3,000 to $5,000 gold to clear the price. I think the gold was $420 back then. So I still think the same, but I mean, it's just one's man opinion. But I do think we are going to get, as I mentioned earlier, some explosive move this time rather than gradual bull markets. I think the tension is built up so much in these markets because of what this gold cartel has done to keep these prices at artificially low, that once they lose control this time, which is why they're fighting it so much now, all heck's going to break loose.
Yeah, and the longer this all goes on for, the more stored potential energy there is, the more there is to release. And I completely agree. So Keith, it seems like gold and silver are following oil to a certain degree. Oil's moving up, and especially silver has just been following oil. Are we going to need oil to move higher before we see a big move in precious metals, in your opinion?
Well, I don't know if I agree with that statement, Ken, because we had oil down at $26, a couple of years ago, and it's now around 70. That's approximately a 3 times move, and silver is 1650, and it's up from its lows of, I think it hit 1330 was its low print intraday. So that's interestingly enough, gold's performed okay. Silver has been probably one of the worst performing commodities there is out there for whatever reason. That makes no logical sense to me, but it's been very, very much caught in this trading range. And just every time, as Bill said, every time we get up over $17, it doesn't last very long. It gets knocked back down pretty quickly for whatever reason. So it is very, very frustrating. But look, I don't think we need higher oil prices to drive gold and silver. Oil's running for different reasons right now, and it's kind of falling the rest of the commodity space, and the precious metals are kind of being left behind.
Bill, the U.S. dollar has benefited from essentially having a monopoly status around the world. Not much competition. We know China is now a larger economy than the U.S. by, depending on what metric you look at, by purchasing power, they're actually larger than the U.S. China is accumulating gold. We know Russia's accumulating gold, while the U.S. disparages it. And I'm just curious, is this something that you believe China and Russia are preparing for, this shift of purchasing power from Western nations to the East, per se?
Well, all I can say is a couple of things that I absolutely know for a fact, that the Russians and Chinese know what Gada knows. I mean, they focused on Gada's work. They've been to our conferences up in Canada and in London. I've spoken 3 times with the Sovereign Wealth Fund of China, and they know about how the gold price is being suppressed and what's being done to keep it down there. So while those in the United States government or whatever disparage it, you say, or it's not discussed, or Canada and Australia can get rid of their gold, they're buying and buying and buying because they know what's coming, some of the for the reasons we've already discussed. And so they're just laying back and just accumulating and accumulating, and it's going to be a big deal when all this changes, and they're going to own so much gold. And as they say, they know what's coming because they know it's a matter of time.
Yeah. Keith, essentially same question. The U.S. has spent so much money and gone into debt for all these wars, and China has been going into debt, but they've been building out infrastructure. They've been building out their cities. We've seen all these stories about their ghost cities with buildings and bridges and nobody there. And if the U.S. is bursting at the seams with their major U.S. cities, and if we do have this shift of purchasing power from the west to the east, I mean, it's possible we start seeing Americans, packing up their bags and moving out to China to go work in these cities that, might be booming in 5, 10, 15 years. And just the implications of gold and the shift of purchasing power. What are some of your thoughts on this?
Well, it'd be quite interesting to see Americans pack up and move to China for work. I hadn't quite thought of that ever occurring, but look, there's a move. I think in the U.S. there's been a few senior politicians trying to convince the government to focus on gold, do an audit on their gold, and so on. And every time someone tries to do it, they get shut down. So, whether the U.S. has their gold or not, is debatable. I would assume that they probably don't have the number that they claim they do. But unfortunately, Trump ran on this platform, whereby he wanted to rebuild the United States. China gets criticized, for borrowing the amount of money they borrow for investing in their own country. The Silk Road and all the infrastructure projects, the building of cities, and so on and so forth. But the Chinese government, they're making a 25-year, 50-year plan. They're building these big infrastructure programs or projects because they've got a very, very long-term view. I would love to see the United States do the same thing. I think if you drive around the United States, you see the infrastructure. It's in a lot of places it needs to be improved, and there's issues and so on and so forth. And if the U.S. government would cut down half their military expense and then move that money into infrastructure projects within their own country, they would still be running the same deficit, but I think it would help a lot more people. And I think it would create a lot more productivity. And I think that's what China is ultimately trying to do. And I think that it's a good thing versus a bad thing. I'd like to see the U.S. do the same, actually.
Right. Yeah, debt isn't necessarily a good thing, but the investment of the debt might play out better depending on where it's spent. So it's definitely an interesting point, especially as China is planning for its future. And it doesn't seem like the U.S. is in many ways. But having said that, we're getting ready to wrap up here. I want to give both of you an opportunity to give our audience a place to go, a place to learn more about the information, or opportunities to invest and partner with your companies. Keith, Bill, if people want to learn more about what you're doing, please let them know where they will go and what they'll find.
Well, they can go to www.gada.org, which my colleague Chris Powell's been running for nearly 20 years. It does a great job, and they just got back from Hong Kong and Singapore and spreading the Gada word over there. They can sign up for his list. And mylametropolecafe.com, I've been doing it for the same amount of time, and people can sign up for a 2-week free trial and see if that's of interest. And we're going to carry on until we win this thing, and it's just it'd be nice to get some little more zest back in the market and have the bad guys, as I call it, have some more trouble doing what they're doing, so that we can start going to where we all know we're headed anyway.
Absolutely. And Keith, if people want to learn more about the companies that you're running, you're part of, let them know where they can go and what they'll find.
Yeah, sure. Well, there's my Twitter account, obviously, Keith_Neumeyer. It's interesting, please have a look at that. And of course, the two companies that I run, First Majestic Silver, the website is firstmajestic.com. Have a look there, and then do your own research, obviously. But big silver company, and then my gold company, First Mining Gold, which is just simply firstmininggold.com. And same thing, have a look at it. There's lots of information on the website.
And that's a wrap. Thank you both for coming on CrushTheStreet.com.
Nice seeing you again, Bill and Ken. Good chatting.
Keith, thank you. Great being on to be on with you.